Hello everyone, welcome to Yadnya Investment Academy. Today we will talk about the GST bill which was passed by Rajya Sabha on 3rd August and in all likelihood will be passed by Lok Sabha as well next week. In the last video, we talked about the concept of GST, but in this video we will go into detail about the GST bill, its features, the advantages and disadvantages for various sectors, as well as the roadmap ahead for the bill. To start with introduction, this bill was announced in Parliament in year 2006 with the objective to simplify and unify the indirect tax regime in the country and promote easy compliance. GST is already present in 140 plus countries across the world, and it was first introduced in France in 1954. Going to the key features, we know unlike most of the countries in the world where it is a single tax structure, in India we have dual tax structure in GST, which means there is a separate central GST tax and then there is a state GST tax. Central GST will replace all these existing central government taxes. Similarly, the state GST will remove all these state level taxes. There are still few indirect taxes which doesn't come under GST purview, and those are customs, stamp duty, tax on petroleum product, electricity tax and tax on alcohol. Since this tax is applied at consumption side and not at manufacturing side, therefore there will be few manufacturing states like Tamil Nadu, Gujarat, Maharashtra which will have losses once GST gets implemented, and therefore the central government will pay compensation to all those states for losses for up till 5 years. Administration of GST will be the responsibility of GST Council, which will be the apex policy making body for GST. Members of GST Council will comprise of both central and state ministers. There is still no clarity on what final GST rate structure will be, but the rate is expected to be between 15 to 18% with separate rate for some luxury items, essential items and standard items, which will be decided in later stage once the law gets passed. Now we will discuss the impact of GST. We will start with positive impacts. The first is it removes multiple taxation, which we already know since so many indirect taxes get exhumed because of GST, which also helps in lesser tax disputes. There will be also significant reduction in tax disputes related to the definition of goods and services, as GST is uniform tax on both goods and services. Also, there will be a significant reduction of tax on manufacturers, as this GST is a consumption side tax, which helps manufacturers be more competitive in international and national markets. By few estimates, once GST gets completely implemented, India will get a boost of almost 0.9 to 1.5% on its GDP. With the uniform tax structure of a product across all the states, it will help in preventing tax leakage and increase the revenue of government. It will also help in seamless interstate flow of goods, which will significantly lower transit time and improve the truck utilization. It will also help in greater cost competitiveness, as your competitor now will not get extra tax benefits because of his location or his product. There are expected to be productivity gains across all the sectors, especially in tax and logistic areas. There are few sectors which will have positive impact due to lower tax rate, even though if we consider 18% tax rate, which is on higher side. Cement, automobiles, consumer durables, entertainment, building material and metal, all these sectors currently have around 25 to 30% of tax rate, which is likely to get reduced once GST comes in. Now we will discuss about the negative impact of GST bill. First, dual control will be there on every business, which is by both state and central. Like today, the retail business only has the state government's intervention, but now it will have both central and state intervention. All credit will be available on from online connectivity with GST network only, which may impact small businesses negatively as they may find using the system more difficult. Third is that the state will lose autonomy to change tax rate, and it will be done by GST Council now. The fourth will be the loss to manufacturing states, as we have already discussed about it. Petroleum and liquor is still kept out of GST purview, but they form almost 40% of India's total trade. So significant portion of trade is still out of GST purview. The next is that if the GST rate is kept on higher side, it may have a negative impact on inflation. Last is negative impact on sectors which are currently enjoying no excise duty or other tax benefit, such as textile, dairy products, media which doesn't have any indirect taxes currently, pharma which enjoys a lot of tax benefits which are likely to continue for some more time. Then ITES and telecom are both service related industry, and in all likelihood GST rate will be higher than the current service tax rate. Now, since you have heard so many great things about GST bill, you must be wondering what is the roadmap ahead. So the GST is already passed by Rajya Sabha, and in all likelihood the amendment will be passed by Lok Sabha next week and will be approved by President of India. Then the next step is that states, at least 15 states in India, have to approve the amendment in their assembly, which is likely to take another 1 or 2 months. After that, the GST Council will be formed, which will basically draft all the GST laws as well as the tax structure, and then it will basically send this for recommendation for both union and state governments. After that, the GST network, that is the IT systems, will get rolled out by March 2017, and then in all likelihood by 1st April 2017 GST will be applicable for India. Hope you find the video useful. If you have any question or comment, please do let us know in the comment section below. Thank you for watching the video. Have an awesome time ahead.